Hey viewers, welcome to the month end performance review video. So we're going to take stock of how our trading happened over this entire month of January and what our profits are, overall profits for this 1 month at the end of this month one. So what you have to do is go into your account section and navigate to the console section within an account and just select the P&L option. P&L, and it will open up the console website. So here you just say you need the statement for future and options F&O, both realized and unrealized, and you just say for the last 30 days for this entire month of January 1st onwards, and that's all. So there it is. It clearly says for this January month we had a total profit of 12,740, out of which 1,960 is different charges and taxes. Our net profit has been 10,770 or something like that. So let's go ahead and take note of this. So what I have here is a dashboard, and we'll make note of the P&L that we had. So that is the P&L statement at the end of month one. Total profit of 12,740 and a net profit of 10,770 after accounting for all the taxes and the charges. Now, what is the total amount of account value that we had on average through the month? So that is 2.58 lakhs, and we will have a separate video where we'll see how we arrived at this number. But to give you overall picture how we got it, you again go to console, zero the console, and you go to the section that says reports, and from there we can go to downloads, and in the download select contract note and select your date range, which is the past 1 month, and it's better that you download in Excel format. Either you do that, or you can also go to the section called funds, and from here go to the statement section, and there you have it, a detailed statement here on a daily closing basis. But we will see in detail how we downloaded this statement and how did we come to this total average amount of 2.58 lakhs deployed over the last 1 month for the last 31 days. For your understanding, I can tell you this much. So what if you have a total of 10,000 rupees in your bank account throughout the 31 days of the month? Then the average amount that you had throughout the month will be the same, 10,000, isn't it? Because there hasn't been any change in this amount, so average is going to be the same amount. Whereas let's say you had an amount of 10,000 for the first 15 days of the month, and you had a total amount of 20,000 for the remaining 15 days of the month, then can you say on an average you had 15,000 throughout the period of 30 days of the month? Can you say that? Now, why is it? Because it's because you had 10,000 for 15 days, right? And you had 20,000 for another 15 days. So you should have on average between those two for the 30 days, right? That's how the averages work out in mathematics. Looking another way, you had 10,000 for 15 days, or a total of 10 into 15 or 1.5 lakhs accounting for the first 15 days, and similarly a total of 15 days into 20,000 or 3 lakhs accounting for the last 15 days, or a total of 1.5 plus 3 lakhs or 4.5 lakhs accounting for the overall 30 days. And if you take an average of a total of 4.5 lakhs over a period of 30 days, it comes to 15,000 per each of the 30 days. So whichever you look, that is how the averages work. So in a similar way, we would have begun our month Jan 1st with some amount in the account. Then sequentially we would have kept adding some more amount to this, transfer some amount from your bank, and in between you would also keep withdrawing the money from your Zerodha account from your broker back to a bank. You withdraw your amount. So it's not going to remain same. It's going to begin at some level, increase few days, decrease on few other days, and going to end at some other level. So if you take an average, right? So an average in this case would mean what is that one amount which if you had same amount throughout your 30 days of this month, then it's the same as having all those different amounts of money throughout those 30 days of the same month. So that's how the average is calculated. So we'll look into the exact calculations, how you need to consider all of that in a separate video. I'll have one made for all of you, your understanding, your knowledge. And that is very important to calculate our true return on investment, ROI, because that is how banks also calculate the ROI, the interest, be it your savings bank interest or any other form of interest payment. They will calculate the average standing balance or average opening balance or closing balance as of the day ending, and they'll take an average of that. They'll calculate the closing balance and they'll take an average of that over a period of time. So in the same way, we will calculate what is our average total account value, and against that, how much money we made on an absolute basis and on a percentage basis also. Okay, so let's calculate the total P&L in a percentage basis and the net P&L, which is the actual thing that we are interested in, again on a percentage basis. So it comes to, so that is the answer. Our total net profit was 4.94%. Just to say, this 12,740 forms 4.94% of 2.58 lakhs that we had on average. So close to 5% is what the total profit we made, and 4.17% is the net profit after accounting for the charges and the taxes. It's about like 4%. So not that bad. On a monthly basis, we are made 5% on a total profit basis and 4% on a net profit basis. So what does this mean for the overall year? So it means if you just multiply it by 12 months, right? If you're just consistent, well, a rough basis, let us take it, right? So close to 5 into 12, even if you take, on a simple interest basis, we're not compounding, right? If you compound, you'll get a much higher interest. But even if we say a simple interest, we calculate, so 5% into 12 is like 60%. So close to 60%, some 59% something will be your overall total cumulative annual returns, and something around 50 or 52% will be your net P&L. So after you take away all of the taxes and the charges, so 50% on a yearly basis is not that bad. In fact, our initial target was something around 25 to 30%, right? To justify the kind of effort that we're putting, the amount of risk that we are taking, and the time, the energy that we are giving. So that is very important. Anything more than 30 is something that is you really need, because it's a mentally demanding job. Not only should you be sharp, good with numbers, but also you need to have a lot of patience, discipline, right? So you need to see how much you're getting in return. If you're saying negative returns, then definitely you'll be demotivated. But even if you're making some profit, and there is something like 10% or less than 10%, it doesn't make much of a difference from your fixed deposits or your debt mutual funds, where it's passive basis investment, right? You don't need to worry about anything. You can have your life, rest of your life, without having to spend many hours on a daily basis, right? Or at least an hour or so you still may need to spend during the market hours, and often also you need to perform a lot of assessment analysis, and you need to arrange for the funds, keep transferring the funds between your bank account and your broker trading account, and vice versa. So a lot of effort is involved. So you would think that for this additional effort you're putting and the risk you're taking, because this is not a guaranteed return, there's a lot of risk that is involved. Even though you're taking precautions, right, you need to be very careful in the time of trade that you're taking. You need to change your approach according to the market situation, the condition. So you would like that beyond that 10%, right, you're going to make some substantial gains. So minimally, let's say it is 2 times that 10%. That is what you would think on a rough basis, right? For different people, it could be different thing. For few people, 15 to 16% may be high enough. Okay, they'll may be happy. A few other persons could be 20-25% also, right? But for me, I had taken 30%, because given this much of risk, it should be some 4 to 5 times the risk-free returns I get from fixed deposits, right? 4 to 5 I took as a rule of thumb. It's not like a exact science. See, 4 to 5 times is a very big number, right? 4 or 5 number itself will not be big, but 4 times or 5 times that much bigger, that is a really big number, right? So it's not easy to get that much of a return very easily elsewhere, correct? So if I'm getting to 4 to 5 times the fixed deposit or term deposit rates, then maybe I say it is okay. So that is what on my personal level I'm happy with, given the risk I'm taking and the effort I'm putting into this on a regular basis, right? So we had 10 trading sessions, 10 or 11 sessions in this month, sort of 20 days, 21 days, total number of trading days in the month. So roughly half of those times you are involved. Or on an annual basis, we'll spend some 120, 125 days on average, right? If you're this consistent, or maybe slightly more, because in this January month, the last 1.5 weeks or so, I was not that active because I had my regular work also to tend to. I got busy with it. Otherwise, I might have got another 2 or 3 more sessions, and it would have been like 14 sessions out of 2021, or some 65% of the time I'm involved in which case, on a yearly basis, I would easily get 130 or 140 sessions as well. So those many days, if you're getting involved, right, then you would want to ensure that what are the returns you're getting are not just slightly more than what you get from a risk-free interest rate in terms of the bank term deposit, but significantly more, right? So double, on my case, it was 4 times or even 5 times, and that is where I come up with that number, 30%, right? And what I'm getting at the end of first month is even more than that, which is 50%, right? And that too, net returns. Total returns are even higher, 60%, and net returns are 50% on a yearly basis. So this is because we had a good month in January. Few days had a lot of volatility, and the trades we took, the fast strikes, the premium was high, and after we entered, there were big moves, but they were not huge moves sustained for many days together on a one-sided basis. But we also ensure that we will stay away from those kind of days, right? So we took those precautions. All of this have ensured that where there was a possibility, we could still go and extract that premium that the market was offering us. At the same time, stay away from few of the days which we believe were not that conducive. So had we taken more risk, I'm sure we might have made more profit, right? Now we're saying 5% on a total P&L basis. Maybe we might have made 7% or even 8 or 9% also. It might have been possible, right? If I had taken a larger risk by dealing with closer strike prices, because most of our trades we took, if you remember, the last this 1 month, this entire January month, have been short strangles, right? Few times we took short straddle also, very few times, but we took it in a very calculated manner, and we had a very strict exit criteria, very short, small stop loss, and we just exited out of it, right? So if you see it, it is still possible to reduce the amount of that the market, right? It has not shown its true colors, right? It's worst case scenarios, it has not yet shown. That's what I am thinking. I'm being very humble. Having seen the market for many years by now, you may be making good amount of money. You will be happy also for a long time, right? For many years, and then suddenly market will show one face. It will show, right? On that one day, and it will wipe out everything, and then you'll question everything about your life and the market, right? There is this existence, you will think about yourselves. So we should not get carried away. I should not get overconfident and complacent by looking into this. I need to be very humble. So rather than trying to teach others, it's like I'm trying to take steps by applying the knowledge I have and what the little experience I have to carve out a path for myself and see how it will go on from here on. So I just wanted to have some working example, in my own experience, where I can say yes, in a sustainable manner I do this trading and see how much capital I can deploy, and without taking an undue risk or a large risk, right? Unjustified risk. Can I still make some decent amount of returns over the long term using their own strategies, right? So that is what my original thought was. So January month, it has been good. Of course, we did take our own precautions and our strategies we deployed, staying away from risk and at the same time looking, where we can make some decent profits on a regular or daily basis. So it may not look a lot for you, just to look at this number itself, right? 12,000, close to 13,000, right? In 1 month, correct? But what you need to see is how much did you actually deploy the capital, right? So that capital is like 2.5 lakhs is what you deployed on an average basis. Right? This is what your banks also would have calculated the interest based on. So what do you think your 1 month interest would be from your bank if your total capital or principal amount is 2.5 lakhs, right? So 4% of your 2.58 lakhs is 10,000, and the 10,000 you would have obtained on a yearly basis, right? So what is your bank savings interest? 4% or even less, right? Some 2.9 or 3%, correct? So you would have received a total of 8,000 over a year, 1 year period, right? But here we're getting more than that, 12,000 or 10,000 if you take the net profit on a monthly basis, right? In less than 1/10 of the time you're getting that value, right? So that is the advantage, that we are having here, right? So that is what you need to look at, the relative difference that is making you, right, in your journey to make some meaningful wealth or a corpus for yourselves. So there are a lot of aspects further, right, when we have to think about scaling up. So for all of that, we'll have a separate video, correct? So it is one thing to trade with a total account value of an average of 2.2 or 3 or even 4 lakhs. But anything, if you're doubling, right, if you're going 2 times what you're doing now on a rough basis, right, every doubling or tripling, right? So that is like, a new kind of an approach you need to be having, because the more the lot size or the more number of lots you're taking, the more the absolute risk you're taking, right? So it may not be like, abruptly all of a sudden you will increase your trading account size. You have to do that in a gradual manner. So all of that we will discuss in the future. But for now, end of this first month, this is our first checkpoint to see, are we going the right direction, right? Basic question, let's be practical, okay? Let's not pat ourselves on the back. The question is like, do I want to continue doing this thing, right? Knowing the so much effort I put and so much risk I'm taking, I need to constantly keep thinking how much is risk, what is the risk. Night times also need to assess after my work. I do assessment and I have to put that into action, execute that plan in the daytime in the live market. And when things go against me, I need to take a quick decision. I need to go in a systemic way, systematically, based on the stop losses and the maximum loss and other risk I want to take. So many things are there. So am I getting enough return where I will be continue being motivated? That is also important aspect, right? People will tell you, a lot of people will tell you, don't worry about the return, focus on the process, right? It will make you money. That is true. The intention of that is true. It is noble, and thinking like a machine, that is the right thing to do. But we are all human beings, right? It may not be possible that for all of us, correct, we will keep all of our emotions in check, correct? We will not depend on motivation, but our raw determination only always will do that, and we'll keep doing that for all the 200 trading sessions in a year. We cannot say that, right? That does not how it works for most of us, correct? While being systemic in your approach, being unemotional is one aspect, right? 60-70% is true. So the remaining part of it, you still need to be motivated intrinsically, correct? You're a human being, so you need to see some additional advantage you're getting by doing what you're doing, because so much time, effort, money, risk you're taking, money, everything you're putting, right? You better make something that you will not be able to make without doing this, correct? There's one way, where you can gain that advantage of a faster or a higher rate of return. So that will keep you motivated. That's very important. You need to hit that point, sooner in your trading career than later. The sooner that you hit there, but without taking much of risks, just like we have done this month. So let's see how things will play out. So tomorrow is February 1st, the day of budget. So I'll discuss few more strategies with you in tomorrow's video. Thanks for watching.